The Social Stock Exchange, or SSE, is a platform that enables diverse channels of funding, such as CSR, individual philanthropy, and impact investing, to come together and fund organizations with a social purpose. Its objective is to take commercial capital markets to social sector organizations, based on the idea that they can benefit from some of the funding avenues available to the for-profit sector. The SSE would be regulated by the Securities and Exchange Board of India, or SEBI. Recently, SEBI has released the report of its working group on the Social Stock Exchange, which includes recommendations on what the SSE would actually look like.
The Social Stock Exchange would cater to all social sector organizations, and the report defines these broadly. It includes both for-profit organizations that create social impact as well as not-for-profit organizations. The latter is not limited to Section 8 companies, but also includes charitable trusts and societies. Participation in the SSE is open to all social sector organizations committed to creating impact, irrespective of their size, their location, their budget, or for how long they have been active. To participate in the SSE, the legal structure of the organization doesn't matter, as long as it is willing to commit to a minimum standard of reporting, which would provide a range of information about the impact being created by the organization.
The SSE will enable innovative financial instruments to bring in new capital to the nonprofit sector. For instance, the zero coupon, zero principal bond is an instrument that will allow nonprofits to issue donation certificates with no expectations to either return the principal or pay interest to the investor. Other proposed avenues of fundraising include mutual funds, social venture funds, and pay for success bonds. It is important to note here that the SSE would in no way affect the current avenues of fundraising for nonprofits. It only refers to additional means of raising funds. As members of the working group have pointed out, listing on the SSE would not be mandatory for nonprofits. Also, certain recommendations would benefit all nonprofits, whether or not they raise funds from the SSE, such as a standardized framework for reporting social impact. Nonprofits do not need to have familiarity with financial markets to participate in the SSE. The report recommends setting up of a capacity building unit and a capacity building fund of 100 crore rupees to support nonprofits in leveraging the SSE. The recommendations taken together are also expected to provide a stronger identity to the sector.
The funding structures put in place for nonprofits would benefit for-profit organizations such as social businesses as well. Unlike nonprofits, for-profit organizations are allowed to raise money through equity instruments, and therefore an additional benefit of the SSE is that it enables social businesses to access new pools of equity capital by connecting them to investors.
As mentioned earlier, any organization that wants to raise funds through the SSE would have to adhere to certain minimum reporting standards. This will determine whether the organization is in fact in the business of creating social impact. The working group recommends that all organizations, whether they are non-profit or for-profit, state their intent to create positive social impact, describe the nature of the impact that they wish to create, and report the impact that they have created. A standardized framework would help create uniformity in impact reporting, which would in turn help decision-making for funders and investors. Certain aspects of the minimum reporting standard, such as how it will be implemented, still needs to be figured out. The working group envisions that over time, these reporting standards would evolve and become more rigorous and sophisticated.
There are a number of provisions in the report which make the social stock exchange attractive for funders as well. The first is the introduction of standardized reporting norms, which will help reduce information asymmetry between funders and recipients, boost transparency, and facilitate quicker decision-making among funders. Second, a number of tax benefits and regulatory changes have been proposed, which will make it easier for different kinds of investors to participate in the exchange. For donations through the SSE, philanthropic donors would be allowed to claim 100% tax exemption. Similarly, a benefit for companies doing CSR is that if they fund a nonprofit through the SSE, it will count towards their CSR expenditure.